Yeah, Monday. Monday, the 12th of March. Hope everybody's having an absolutely amazing day. Welcome to today's edition of the Daily Market Commentary. For those of you new to the channel, welcome. Please hit that like and subscribe button so that it just makes me feel good, makes me feel warm inside. No, for those of you new to the channel, we look at the same 10 to 12 futures markets every day, looking for potential trading opportunities. I'm not got a whole lot to cover on today's video. Today's video, we're going to cover a little bit less than normal because, well, frankly, not a whole lot has changed since recording the weekend edition last night. And so I did want to point out two things worth looking at in the video today, just because it's early morning and I wanted to get this thing out as quickly as I could because both of them are potential possibilities. I guess potential possibilities comes from the Department of Redundancy Department. Both of these are potential trades that I think we should take a look at. The first one here being a short on the S&P. If you think about our rules, our rules for a potential breakdown, one of them is a room to roam, and I think this does have room to roam, and I think it can roam all the way down to this region here. So if we do break below this 27.93, and I'll try to get this video up before this breakdown would occur, then I think that price could continue to fall a bit further into here. Ultimately, though, I think that we're going to wind up, if we do come back into this region, back up to right about where we are in price. And biggest reason why is because this market has been so tied in performance, if you will. The market has been so tied to inflation over the last couple of weeks. And, what's a great way to measure inflation? CPI, Consumer Price Index, is a great way to take a look at that. And I think that the market, typically when there's a big announcement coming or something that's going to have market volatility with it, we take some moves before the announcement, but then right at the announcement, we're back to kind of where we started. And I think if we start Monday morning right up here, then Tuesday, by the time we get to the CPI announcement, we'll be right back into this region. And that would serve to make sense, with a pretty good reversal period in here. Now, looking at the Nasdaq, if you do take that short in the S&P, I don't know if I would take it in the Nasdaq because the Nasdaq's not showing me the same basing and the same weakness. However, if we do get that breakdown here and you want to take the long on the reversal, I think the Nasdaq is a better opportunity than the S&P. And the reason for that is relative strength. The Nasdaq is relatively a stronger market than the S&P over the past couple of weeks, as the Nasdaq is at an all-time high. So we certainly don't want to short something at an all-time high. The S&P, not near that all-time high yet, and so we are still okay shorting that S&P. So there's really our biggest change from the weekend edition overnight. Taking a look at crude oil, another one to kind of pop in on. And I normally don't like to draw any lines without recording, but I will tell you, the first time I recorded this, I used the wrong microphone, so you couldn't hear me, so I did draw this line. The crude oil, we are getting a little bit of a rally, but I think we could get a rally up into this little 15-minute period. So just keep this 15-minute period on your charts. I think that there was some support right through here, acted as resistance right through here. So we could get a rally back up to about 62 and then get a little bit of a reversal. This is a day trade. This is a short time frame trade, slightly lower probability, but these are one of those ones where you've got a really small amount of risk and it could be really worth a good reward and a good return on the crude oil move. Now, as far as the rest of the areas that we have, not a whole lot has changed since our recording last night, so not a lot to go over. The one that is the closest to breaking out is the bonds. The bonds have just done more chopping above this area. And anytime we chop above the breakout, I feel stronger about the breakout. So just keep that breakout area in mind. One more opportunity that did present itself, and I'm not going to go into each one of these. You guys can go watch the weekend edition, is the Japanese yen. So the Japanese yen, we'd had a breakout short on this move right here. And I know a lot of you, I'm sure, took this short on the breakdown here, which was great. Price is now rallied back up for a retest, so I remove these lines, and it gives me another bite at the apple if we break below here, because if we break below here, I don't feel like this is going to be a strong stopping point because it's a retest of this area back through here. So I think there's room for this thing to fall if it does drop below here. Combine that with some strength in the dollar, and I think there's potential for this to get to this 925 area down in here. So plenty of room for this thing to run. Real quick, for those of you, one of the things to always take a look at is your economic calendar. A great place to look at an economic calendar for those of you that have maybe you've got one that you like particularly. If you're not looking at an economic calendar every day, you should. That's a very useful tool. TradersArmy.com. Our friends at TradersArmy.com have a really good economic calendar. If you go to the If you go to the command center, the command center has a number of different tools that you can use every day, and those tools, that way you're not jumping all over the internet for individual items. And if you slide over to the economic calendar, this is an all-encompassing economic calendar, meaning it's not just U.S. markets. It does actually show markets from all over the globe. So the euro, the Japanese yen, the Aussie, all the different markets. For those of you that are trading the currencies and the futures of those markets, and this is where we get our CPI. We also know it's important because it's got a little red bar next to it. A little red bar tells us that it has high economic impact. So take a look at your economic calendar every day and every week, as it's something that I think is going to be important for everybody to use. And then feel free to dive into this command center and use the command center as you see fit. A lot of traders have given pretty good feedback on this as well. So with that being said, I'm going to wrap this thing up for the day. If you've got any questions, please feel free to reach out, Chuck@iiefinancial.com, and I will see you all real soon. Thanks so much. Have a safe trip.